You don't lose money because you don't make enough. You lose money because you don't understand how taxes work. Welcome to Learning Money Out Loud, day 3, where I break down money in the most simplest form so anyone can understand it. Anyone that has never been taught about savings, taxes, investments, or even life insurance. They said fake it till you make it, but how about teach it while you build it? Welcome. So, today we're talking about something that affects every dollar you make. And you want to know what's the enemy? Inflation. But that's a next topic for our next video. So, there are 3 ways your money is being taxed. And as someone who's studying finance and also a licensed life agent, this is the most important things to understand how taxes work. So there are 3 types of tax brackets, right? There is tax now, tax later, and tax deferred. I'm gonna give you 2 seconds to go ahead and grab your pen and paper so you can get this down. Okay, let's go. So let's talk about tax now. Tax now, you pay taxes on the money you earn and also on the growth. So think about regular savings account, CD account, brokerage like stocks or ET. So you earn the money and it is taxed now. Any interest or dividends is taxed each year. Capital growth is taxed when you sell. So it's good for anyone that's want flexibility, right? I may need money anytime, like right now. Now, let's go to the second point, tax deferred. Tax deferred, it means you don't pay taxes now, but you will later when you take the money out. So think about 401k that you get at work, traditional IRA, or some annuities that is for retirement. So any contribution that may reduce taxes today, but the money grows tax deferred, which is good, which means that withdraw later, tax as income. So you're going to get taxed. So it's good if you're expected in a lower tax bracket on the later on, and it's good for long-term retirement. Now let's talk about tax later. Tax free. This is one of my favorites, and I think many don't know about it. So you pay taxes up front, which means you pay taxes now, but withdrawals are tax free later on. So those are good. Think about Roth IRA, Roth 401k, right? So you contribute tax money now, but later on the growth there is no taxes. So those are good for if you expect to have higher tax brackets at a later on in your life, right? So long-term wealth building, in other words, that's what I called it. So it's not about how much you make, it's about how much you keep. Follow for more daily money lessons, and tomorrow we're going to be breaking down the difference between Roth IRA and a traditional IRA. See you tomorrow.